Hi everyone, welcome to Value. So Figs has officially listed onto the market and it has done fairly well, 36% up. Share price was very steady. It's just kind of showing how steady this company is in general. Everyone knew what they were trying to value this company at. No one was really trying to trade this company. Yeah, so basically opened just above that $28 mark. And then, yeah, throughout the day it was just like $29, $30. So not really any big fluctuations. So overall pretty steady. I think it kind of values this on a fair value basis. So yeah, like on a current valuation, it's about $4.8 billion. But if we count on a fully diluted basis, it's closer to $6 billion. So it just depends which figure you like to use. But I'd likely more side towards a fully diluted basis, which would be around $6 billion. But yeah, but if we go 4.8 for now, and we compare against a company like Lululemon, which I think there is some comparisons against because they do produce some of the sportswear that is very similar, and majority of Fig's customers are women, who also happen to be a big fan of Lululemon as well. So if we kind of do like a simple benchmark, then it kind of gives us a good idea as well. So if we look at the revenues for Lululemon, which are massive, which is at $4.4 billion for the last 12 months. And then we look at, say, Figs, and we go, if these guys are on track to produce about 500 or even 600 million in revenue, then, you know, that kind of values them at least maybe probably about at least a tenth of Lululemon. So about a tenth of Lululemon would be about $4.4 billion. And if we include that the fact that they're a higher growing company and their sales are a little higher than a tenth of Lululemon, then that 4.8 isn't actually that far, right? If we look at the whole valuation, it is actually very much on par in terms of valuation standard. So we have to bear in mind that Figs is actually more of a growing company, much quicker. Like Lululemon's growing quite well as well, but Figs is growing at a substantial rate, 172% in the last quarter release. So if we look at the whole quarterly situation, it's 172%. That is by far much higher than what Lululemon's achieving of around just above 10%. So yeah, like if we look at it from 2021 in January and 2020, yeah, so it's around about that, just above that 20%, which yeah, like in the scheme of things, which probably pushes Figs towards that $6 billion mark. So and in terms of fully diluted basis, it would be where it's at. So in a sense of buying this stock, it's actually not, like, it's not cheap, but it's not expensive either. But I think it's a really good opportunity because, like, just as the stock price is as well, it's just showing this company is a relatively stable company in what it does. And yeah, I think they've found a niche in a market which is normally the clothing market can be quite competitive, but these guys have managed to find an area where there's not that much competition for people making medical wear, particularly nicely designed medical wear. So now, yeah, so I think Figs just happens to have found a really good market and are just doing really well selling into this market. Yeah, I think as long as they can continue what they're doing right now, they're going to do very well. Yeah, and I think so far the share price has done well. It potentially can go a little bit higher. I'm looking at more possibly $35 as time goes, even. And in you know, each time they release a quarterly, that's probably a bit more value. And maybe at the end of the year we might see probably a maybe a $40 to $50 share price by the end of the year, which will be quite nice, given the stability of this company. And because I mean, this $30 kind of values in quite a bit of the growth already. So that's the thing. Like when you buy at the market fair price value, they have to achieve a certain amount of the growth to really justify this $30 to begin with. But if they achieve it, they start to go into this next tier, being worth maybe $40 to $50, probably by the end of the year. And then after that, you get those extraordinary numbers. If they can keep growing above 100%, then next year the valuation just continues to go even stronger than that. And I think that's what is the powerful thing about buying into high growth companies, that hey, at the IPO you're kind of buying with the value of the growth kind of more or less priced in for that stage. But at the same time, yeah, like the longer you wait, the more you see that growth coming in, and it compounds the share price in a really nice way. But yeah, I think $30, if you haven't brought any, it's a good pricing. But of course it values in a bit of that growth, and you probably don't want to be buying in if you're not a long-term shareholder. If you're looking just to get in for a little bit, for a little while, I mean, then it may not be worth it, because that $30 is pricing in, you kind of in a fair value range, so the upside's not going to be like surprisingly higher, but it's still going to be quite a decent upside. Like, it's a lot better than a lot of companies that are currently on the market, and given what it does and how well it's growing, I think it's worth holding, at least for at least the medium to long term period, just to see those extraordinary growth rates continue to grow. Yeah, if you've got any questions or comments, post below. But yeah, so far, I think Figs is on the right track. Looks to be like a good quality company. Nothing standing out like there's any problems, but do mention them if you have any worries about this company, of course. And yeah, like using Lululemon as the benchmark, it is basically on par with this benchmark. But I think once they release more financial results and everyone gets really comfortable with the growth of this company, I think it actually begins to increase in value and just go, yeah, like probably closer to that $40 to $50 range by the end of the year. Alright, until then, good luck investing, everyone.